Hey, what's up guys? Omar here, broker and CEO of Alden Mortgage and Ome Realty. So we're gonna do another mortgage rate update. The IRS is coming in hard. They're not messing around, dumping in a bunch of money to go ahead and audit a bunch of different people. Well, we're gonna tell you who they're actually gonna start auditing. And then there's this TikTok trend. There's always some sort of TikTok trend. Somebody on TikTok is doing something stupid or something actually smart. You know how many things that we learn off of TikTok? God bless TikTok, even though their privacy agreement sucks. I didn't even know about it until I started reading the Joe Rogan Experience, and then I deleted it. Don't want to do anything with TikTok, but there's something that's called quiet quitting that people have been doing on TikTok. And we're gonna see how much money the IRS is actually dumping in versus how much money they're expecting to get out, who they're gonna audit, and how much they're trying to get at the end of it. But let's go ahead and get on with the mortgage rate update. As of 8/16/2022, we are going to price out 10 different mortgaging products. There'll be a 30-year fixed, 15-year fixed, 30-year high balance, DSCR, bank statement loan, FHA 30-year, 7/6 adjustable rate mortgage, USDA, VA 30-year, and a hard money fix and flip. So let's get on with it. As of 8/16/2022, 30-year fix will be sitting at 4.57%. 15-year fix will be sitting at 3.59%. 30-year high balance will be sitting at 5.10%. DSCR, which is a debt service covered ratio loan. This is a loan product that's mainly for people who are trying to get on the investing side of things, where they're trying to qualify the property that they're going to get based off of the rental income that's coming in. That is going to be the servicing. The debt is going to be your principal, interest, taxes, and insurance. And then, for instance, if you had $1,000 coming in or $10,000, whatever the case may be, let's say $10,000 coming in on as far as rental income is coming in, which is your servicing, versus the debt that's going out, which is your principal, interest, tax, and insurance. If they're both $10,000 at the same time, then it's going to be a 1-to-1 ratio. Bank statement loan is another one of those non-agency, non-qualified mortgage products where we just look at your debits versus your credits on your bank statements, and then we'll do a ratio based off of that, and then we'll see what your debt to income is based off of only your bank statements. FHA 30-year will be sitting at 3.88%. 7/6 adjustable rate mortgage will be sitting at 4.8%. USDA will be sitting at 3.98%. That is one of those zero down payment mortgage products. VA 30-year fix will be sitting at 3.97%, and hard money fix and flip is going to be sitting at 9.50%. I think everything pretty much went up. Pretty sure everything just pretty much went up except your bank statement loans, which is weird. That's kind of interesting what happens. And so if you are interested in any one of these mortgage products, link in the description below for 0% listing on selling your current home, up to 50% commission rebate. At least let me try to go ahead and beat your big bank. Any one of these mortgaging products, at the end of the day, it's money in your pocket. If you want to use this, great. If you don't want to use this, it is what it is. Disclaimer also, the mortgage products that we do, even though I put a disclaimer at the end of this anyway, because by law you have to, the loan product that we go ahead and price out, it's going to be a $500,000 loan product, $400,000 or $500,000 purchase price, $400,000 loan, 20% down, and then an 820 credit score, which majority of every single person who advertises as far as mortgaging products, they all do the same thing. They go ahead and dump you into, you know, the most highly qualified bracket that you could possibly do, and then you kind of work it around to your situation, because everybody's situation is different. So you give the best case scenario, and then you go ahead and go from there. But there's this thing that's called quiet quitting, and it's a TikTok trend that's going on right now, where majority of people, they're just getting burnt out. They're absolutely just tired of everything. They don't want to do the work that majority of companies are asking them to do, and then going above and beyond. So what they do is they're just kind of going to the bare minimum. They're like, you know what, I'm tired, I don't want to do this. They don't see the benefit in it. And for the longest time, and I'm sure a lot of you have actually been put in this position where you just feel undervalued, right? You feel undervalued. You're sitting there at the company, you're busting your ass, you're doing everything that you think that you're doing, and then over and over and over again, you're either getting passed up, or you're not getting the raise that you want, or you're not getting the recognition that for some reason some kiss ass on the other side is getting. So it's like, you know, what's the point? So people, what they're doing is they're saying, you know what, forget about this. I don't want to deal with this. I'm just going to go ahead and do the bare minimum just so I don't have to go and get fired, because it is what it is. What are you going to do? You signed up to do this specific job. I'm going to do this specific job, maybe even less at times, and then I'm just gonna go ahead and live my normal life. They're not doing any, they're not staying overtime. You know, this whole work kind of culture that used to be back in the day, of course, I'm going to go ahead and say it like I'm this old ass dude. Back in my day, it doesn't exist anymore to go ahead and bust your ass. Now, there's a little bit of a caveat to that, okay? Like the thing is that majority of people who do work extremely hard, that just, you know, spend 15, 16, 17 hours a day, which is something that I've been doing for quite some time. And now, you know, I do this YouTube thing to kind of in conjunction to what I normally do. You know, we kind of reap the benefits of everybody kind of being a little bit more lax. Now, is this going to be a trend that's going to go into the future where people are like, you know, they value the quality of life and the things that they want to do rather than busting their ass? I mean, I see the appeal to it. It makes a lot of sense, but let's get on with the IRS. Now, the IRS, they're dumping in a bunch of money, about 80-something billion dollars into, not all of it is going into hiring new agents. Which, by the way, if you are trying to work for the IRS, I did this. Now, by all means, I don't know how much the IRS agents actually make. I did a little quick Glassdoor search. I wanted to see exactly what they make. You know, it's not a bad salary at $111,215 on average a year. The high side of $161,000. Low end is going to be $77,000. But the range, the most likely range, is between $92,000 and $135,000. If you want to get a good job, that's I'm going to assume pretty stable, be an IRS agent. I mean, you're not going to be the best, like the most loved guy at the party, but you know, I just decided to throw that out. So we're trying to see exactly, okay, the IRS, they dumped in about 80-something billion dollars. How long are they trying to go ahead and do these audits for? How much are they looking for return? And then who's going to go ahead and get audited? Now, the total investment that they made into the next, let's say, 7-8 years, it's going to be about 80-something billion dollars. Now, what I did is I went ahead and looked exactly the spending, because this is all public records. You could see exactly how much they want to spend, how much they are spending, what their budget is, and then how much they're trying to get back into return. So the 80-something billion dollars, about half of it is going to go into hiring new IRS agents, and then so the 80-something billion, they want to go ahead and get a return of $203.7 billion in return by 2031. Then that begs the question, where are they going to get this money from? Well, the $203.7 billion, they're going to go ahead and go with, number one, people who were on unemployment. If you're one of those people who are on unemployment, and you are doing so on unemployment, what you can do is you could go ahead and opt out of paying taxes, and then you could go ahead and pay it at the end of the year. You could pay it following year. They're going to start auditing a lot of the people that went ahead and collected unemployment. And then once they go ahead and see who didn't pay into the taxes that you were supposed to pay in unemployment because you promised to go ahead and pay it at the end of it. Now, you could do it at a regular job. You could say, I don't want to pay taxes. I want to go ahead and just do it all on my own at the end of it. Those are the first people that are going to go ahead and get dinged. The second people that are going to go ahead and get dinged are people who go ahead and do a lot of deductibles. Now, those are self-employed people that do over $50,000, $60,000. Like, let's say, for instance, you bring $100,000 in total income, and then you're writing off $50,000, $60,000, $70,000. Those are the other people that are going to go ahead and get dinged. Now, a lot of these expenses are going to be justifiable, but they're dumping in so many IRS agents that they're probably going to be doing this with a fine-tooth comb and trying to find any single loophole on a loophole on a loophole to make sure that, you know, you're not just trying to finagle the system. And then the last people that they're going to go ahead and try to mess with are people who actually get bonuses at their jobs. So, for instance, if you have a job, your job is going to go ahead and give you bonuses twice a year. Now, what a lot of people do to get the maximum return on their bonuses, what they do is they go tax exempt. They go tax exempt on their total for their bonus. Like, let's say your bonus is like $20,000, $30,000, $40,000. Your $30,000, $40,000, you're going to go exempt on it, so you could go ahead and get that money as full. So, because you already know you're getting money at the end of it, right? Or you end up having to pay, like, let's say a few $1,000s, which ultimately it's better to do it this way. I personally always recommend everybody don't just pay into your taxes, because they always end up taking more than what they should be. That's why you get a refund at the end of the year. You don't get a refund because the government decides that they want to be your best friend and they want to go ahead and help you out. They want to go ahead and do this just to make sure that, you know, they have enough coming in, and then they're like, oh, we kind of messed up at the end of the year. You paid a little bit too much. Let's go ahead and give you a refund based off of your state and federal withholdings. So those are 3 people that are going to get hit. They're going to try to get $203.7 billion, but that's going to be your mortgage rate update. And for up to 50% commission rebate, 0% listing on selling your current home or any mortgage assistance, link in the description below. If you like the content, like, subscribe, comment, all that other good stuff. Until next video, guys, I really appreciate you watching. Peace.